big picture to kick us off. I think some of the biggest questions is if it's a stable coin and it's not stable, what is it? How do you think about that?
Well, first of all, there's a couple of types of stablecoins. There's ones that are actually backed by US dollar reserves like USDC. And then these algorithmic stablecoins like the Terra, which was, an innovative experiment. Unfortunately, we can all say it didn't work out. But in the back of all of our minds, I think every crypto native Web3 person really has the hope that someone could figure out a monetary system or a stablecoin that doesn't rely on existing things that are traditionally out there as reserves. So we all rooted for it. Unfortunately, it did not work out. It's still very early in the space, and I'm sure there will be more experiments and innovation. Now, in terms of the latest restructuring plan, from what I understand, they are trying to figure out who are the smaller holders and use whatever's left in reserves to basically give back to those smaller holders. So that would be my number one thing at this point. It is what it is, but use whatever reserves to give back to the retail people that were left holding the bag, if you will. And that's the best thing to do at this point.
I want to ask you more about that, John, because what does it say about the restructuring of a crypto ecosystem? Who should get paid? Who has claim on the assets at the end of the day? And what does the company, what does the protocol actually owe to its investors? How does this play out?
Sure, that needs more clarity over time. But to me, at least from a common sense perspective, this is the one industry where the retail investor have actually, call it front run institutions. For years, it's been retail investors globally that supported this ecosystem till very recently in 2020, 2019, if you will. So philosophically, I think, again, the right move is to use whatever is left to figure out who are the small bag holders or wallet holders and try to make them whole as much as possible.
So what about the idea that other stablecoins can be made with new models? You talked about experimentation here for a second. To what extent does the industry need something like an algorithmic stablecoin or a partial algorithmic stablecoin in order to scale, John?
So the industry right now does not need it. What's going to come out of this situation is USDC, which has a lot of transparency, backed one-to-one with the US dollar, will gain market share. USDT was tested a little bit, but they need to come out with better transparency, and they will do that. And then you had other stable coins, Frax, Celo, they've all held up, actually. So it would be nice to have an algorithmic stable coin, but just like any economy needs a certain unit of account for a medium of exchange that is stable and not as volatile. And for now, maybe one that's tethered to the US dollar and has transparency is the best thing.
We know often regulation lags, and then when it comes, it does more and it overcompensates for that lag. Does that worry you when you think about a potential regulatory landscape?
I've been saying this for a while. Sensible, as an operator, sensible regulation protecting the consumer is what most operators want, especially for companies in the US. So I think if you take positive out of this, I think it's accelerated the conversation. Even today, we heard Gensler come out and say he would be working with the CFTC because every cryptocurrency has a different type of construct to it. Some deserve to be a regulator or protected using different rules, and having different bodies of the government helping out or agencies helping out is actually probably the best thing and accelerates the certainty for the whole space. And once there's certainty, adoption actually becomes better.
I'm curious about certainty in other ways besides regulatory. I'm curious about the technology itself, potential hacks, potential chains, depegging if it's a stable coin. I'm wondering about your thoughts on layer one protocols in general here and investor appetite for them after some of the mishaps we've seen.
Great question. And if you look at the space and the many cycles, let's not confuse cyclical issues with secular growth. In times like this when actually the quality companies or quality protocols or quality applications that actually gain market share and have even more innovation and build better. So my opinion is it's unfortunate. No one likes to see crypto asset prices go down, but the benefit of it is the guys or the people with quality products that have better utility and are really building something real will take market share and also come out stronger and provide more utility in the end.
Also, when it comes to utility, I know tomorrow in our crypto show, our weekly crypto show, 1:30 every week on Tuesdays, we're going to be talking about Ethereum, the merge, and gas fees, and whether they can come down in light of new projects. I mean, I'm wondering how this also pertains to you and Avalanche and the ability to bring down gas fees at the end of the day.
So first of all, great show. I already DVR that and I watch it all the time. So thank you for putting that on. And in terms of what the merge will be doing, it's really Ethereum will get to where Avalanche already is. The first part, it will come in stages, and the first part for them will be going into proof of stake, but it's still going to miss out on the instant settlement that Avalanche has or the scalability that Avalanche has. I mean, just this weekend, the Avalanche blockchain had a scaling function called a subnet, and these gaming companies actually launched on these subnets. Transactions on Avalanche increased 25%, while prices went down like 20-fold. There's more transactions now on Avalanche on a daily basis than are on Ethereum. So with the merge and with all these things that they're trying to improve, there will get to, at some point, a place where many newer generation layer ones are already at, such as Avalanche.
I should say the show also is at 1 p.m. My bad, John, but thank you so much. We also, speaking of Avalanche and the ability to kind of make it through this down market, I'm wondering from your perspective, as things are kind of cooling down in the crypto market, what do you take this time to do?
Take this time to focus. Again, it's similar to the segment previous when you had the venture capitalists on. The good companies that have a good, call it, balance sheet, they have the ability now to gain share and to continue to build. Maybe instead of thinking about 18 months or 24 months for the next raise, you want to be a little more frugal and last for 24 to 30 months. But with that said, the ones with a good balance sheet and the ones with good products should go out there and innovate and take some share. So that's how Avalanche and Avalabs is treating this downturn.